Well, hello there. It's Tyrone Jackson, the Wealthy Investor, coming at you with another great live video for you to learn from so that you can learn how to be a successful stock market trader and investor. Now, here's what I want you to know. I've been teaching people just like you for the past 10 years how to make a lot of consistent money in the stock market, not just a one off play, but whatever a lot of money is to you and you want that consistently, I want you to know you can really grow your account and take it to the next level. So I wanted to check in and show you a chart here. This is, of course, Amazon.com, which has gone over $2,000 per share in the summer of 2018 and is on its way to $3,000. Now, if you look at this 5 year chart, right, you'll notice that 5 years ago the stock was at $297 a share, and each and every time it's dipped down, it has risen. And when we see the stock rise like this, right in this area here, and pull back, that is called a dip, followed by something called retracement. And this stock seems to, when you pull back 5 years, just keep going on and on and on. Here's another dip, followed by retracement, and then the stock just constantly rises. Now, what makes this stock rise? Not only is it its fundamentals, but it's also its institutional involvement. So if you're buying stocks that don't have heavy institutional involvement with hedge funds, guess what? You are not going to consistently make a lot of money in the stock market. It's just plain and simple. And if you're one of those people who don't like to buy shares that are over $200, well, guess what? 5 years ago, you could have gotten it in here on Amazon. And because of the institutional involvement, that's what makes the shares rise. So if you like buying cheap stocks and you're praying that they're going to go over $300 or $400, not going to happen. I like the higher price stocks. Why? The institutions are there. Same thing with Apple. Now, this is Apple stock over the last 5 years. This one has split a couple of times. So, on a split adjusted basis, 5 years ago, the stock was trading about $76 a share. Notice that it does dip down, but it's also followed by very strong retracement. See this very nice run in the stock? Every healthy stock pulls back. Wealthy investors know that's the time to buy it in a dip down here. The problem is we don't know how far down it's going to go, but if the revenue stays strong, that stock is going to do what? Retrace time after time after time. So after a few more dips up in here, look, another buying opportunity right here when the stock was around 156. And where is it now? At 226, on its way to $250 a share. So if you're really serious about making money in the stock market, again, consistently following patterns, then I want to give you some rules that I really want you to pay attention to, right? Because as I always say in the Wealthy Investor Program, it's always about a system. You want to follow a system in the stock market because that's what the big money is doing. The hedge funds, the mutual funds, they're looking for the same thing to appear fundamentally in the stock. Let's look at some of the rules here. Now, here's what all wealthy investors know that you don't. Doesn't mean you're a bad person, just means you're out of the know. You don't have a financial education that allows you to choose stocks well. Hopefully, I can help you with that so you can change things around and start making good, consistent money. Number one, only purchase stocks with strong top line revenue. A lot of people guess at stocks, and that's the last thing that you really want to do is guess. You want to choose them based on something called fundamentals. In 2017, the Amazon.com revenue was over $177 billion. That's up from $135 billion 52 weeks earlier. We call that top line revenue growth. Apple in 2017 had revenue of 229 billion up from 215 billion. You see these numbers where the revenue is rising? That's what attracts institutions and they tend to push the stock higher. Number two, only purchase stocks with high volume. Apple's daily volume is around 30 million shares traded every single day. Why? Because the institutions are in those stocks. When you buy penny stocks with bad fundamentals, there's no demand for the stock. And volume here, daily volume, helps us to make sure that we're choosing stocks really well. See, if you want to be a stock market millionaire, there's certain secrets that you have to know. And again, in my live programs and online, that's what I teach people how to do. Now let's push on because number three is really, really important. Always purchase stocks with heavy institutional involvement. How many times have I said that in this lesson? So the institutions that I want you to think about, and you can find them and make sure they're in the stock, are hedge funds, right? It's some mutual funds, but these days it's mostly hedge funds from all over the world. Why do you want to be in stocks that has heavy hedge fund involvement? Because the average hedge fund can purchase 1 million shares a day. Well, if they're buying that large volume, guess what's going to happen to Amazon? Stock is going to go higher. When they're buying 1 million shares of Apple, the institutions are actually pushing the stock higher. Do you see that? Because no stock makes it to $2,000 a share without heavy institution involvement. All I want you to do is make sure that you are riding along with the institutions. Why? It's a system that just works. It's proven itself over time. Now, if you really want to learn how to trade big money stocks, obviously you should become a member of WI Trade School. It's really cheap, it's really affordable. If you like video tutorials, that's the place for you to be. A lot of people say that here at WI Trade School, it's kind of like the Netflix for stock market traders. Why? All of my tutorials inside are all what? They're all video. Every single week, you can send me your questions, right? And I will answer them in a video vlog. Learn my method. Learn how to write cover calls, stay with the hedge funds, and follow top line revenue growth. And guess what's going to happen? Your money in the stock market is going to grow and grow and grow and grow. I look forward to seeing you where? Well, you can get that financial education right here inside WITradeschool.com. That's it for now. See you in the next video.